After running 200 plus ad campaigns for B2B SaaS companies, I've realized there are only 4 things that determine whether paid ads work or completely fail. And most SaaS companies are missing at least one of them, which is exactly why their ads never scale, no matter how much spend they throw behind it. In this video, I'm breaking down all 4 and how getting each one right is what's helped me generate 26 million in pipeline revenue for our clients in 2025. So let's get into it. Okay, like I said, there are 4 things that are very pivotal for your success when running paid ads. And it's what I've learned, and actually like some of the clients that we take on now, we're looking for these 4 things because it makes our job as marketers so much easier when we have these things. It's almost like a guaranteed slam dunk. The first one, probably being one of the most important, is actual offer, right? What are you selling? What is your product and what does it actually achieve for your ideal client profile? And there are really a couple of components of what I call a cold traffic offer that really determine your success when you're running. Now, the first one being outcome focused, right? So you have to make sure that whatever you're selling is focusing on the outcome that it provides for a prospect. For example, if you're a B2B SaaS company and you're selling a forecasting solution for manufacturers and you just say like, hey, we're going to help you forecast better 80% of the time, right? That's your offer statement. But instead, that's not really what they care about. Yes, they care about forecasting better 80% of the time so they don't have stock outs or become overstocked. But what you could actually say is, we guarantee with our forecasting tool to eliminate stock outs or overstocks. Right? So this is focusing on the actual outcome of what it is that your product does, right? So making sure that you focus on the outcome that is actually wanted by your ICP. And this is important because if, for example, your product solves an outcome that is not that important to them, then you're also gonna have a hard time selling this on cold traffic. So you wanna make sure that, first of all, you're focusing on the outcome, and second of all, that your outcome actually is something that your prospect wants. Next thing is the time frame. So you wanna make sure that you have a time frame for your offer and how quickly you can get them results. So the quicker that you can get them results, the better, because it's going to be much more appealing to them as opposed to saying it's going to take you 2 to 3 years to get results. You say, hey, we're going to get you and eliminate stockouts within the next 30 days of us implementing our tool, right? People like quick things. They want it fast. So if you can attach a time frame, this is going to work great. It's also going to be much easier for you to sell as well on the sales process. So cold traffic offer does 2 things. Makes it easier to book calls, makes it easier to sell, and also easier for you to collect more cash up front. The next thing for a good offer is a unique mechanism, which basically is being different on the market, right? So especially in more sophisticated markets, if, for example, you're going after a industry that a lot of people are targeting with a very similar type of solution, you want to make sure that your mechanism stands out and it's different from what they've seen. Because if you can do that, it's also going to be easier for you to sell. People don't like trying something that they've already tried before because they think that they're going to get the same results. So if you can articulate your offer in a unique way and make sure that you have a unique mechanism, it's going to allow you to sell to people that have maybe tried a solution similar to yours and they don't just bucket you in the same sense with everyone else they've tried. So that one's really important as well. The last thing that's important on a really good offer is risk reversal. So making sure that you have some form of risk reversal and you either say like, hey, if we don't get you the outcome that we're talked about, you either get a refund, or hey, we back this up with a satisfaction guarantee, or whatever it may be, that you can take the risk off of your buyer. That's going to help you sell as well as get people to hop on a call with you. Because remember, these people have never heard about you before, right? So you want your offer to be compelling to them, show that you're confident in what that you can do, focus on the outcome, and show them how quickly you can actually get them results. So those are the 4 components of what makes a killer offer. So the second most important part of running ads is your total addressable market, your TAM, because this is going to allow you to get way better efficiency on your actual ad costs. So for example, if you have a total addressable market with just 100 companies and you start running ads to those 100 companies, it's going to be way harder and it's going to cost way more for you to be able to get only those 100 companies on the phone with you, right? So you're going to be paying upwards of $1,000, maybe $5,000 for a book call if you only are going after 100 companies. So that's why typically if you're running more of an enterprise motion where you're, targeting, let's just say 1,000 companies or 2,000 companies, ads aren't usually the best vertical for you to go ahead and approach this with. Now you can run retargeting campaigns and you can run super targeted campaigns on ads themselves. I just typically stay away from it because there's a lot of variability with your cost. So for example, if you only have 1,000 companies in your total addressable market, you may want to reconsider ads as your primary acquisition lever and instead going more for a ABM approach where you're account-based marketing, and then you can always layer in retargeting with ads itself. Now, what I typically see from our clients that perform the best on ads, they have anywhere from 5,000 to 10,000 plus companies to be able to target. Now, the bigger the market, the better, because that means that these advertising platforms, specifically Meta, can show your ads to more people, which are going to bring down your costs. You're not gonna have to pay as much per cost per qualified book call. Hey, real quick, if you're a SaaS company that's been running paid ads and you can't figure out why they won't scale no matter what you try, that's exactly what we diagnose and fix, and we guarantee to get your ads profitable within 90 days, or we give you a full refund. So there's a link below this video to book a call with me if you want us to take a look. Anyways, let's get back to the video. Now, the next thing is you typically don't want to have a TAM that's really regulated. So for example, if you go after anybody in the government space, it's just going to be a lot harder for you to, first of all, get these people on the calls, but also a lot harder for you to be able to build trust with them. They don't always respond the best to ads themselves, and a lot of them have like policies around what they can actually opt into. So in terms of like very heavily regulated industries like the government space, you can get away with in terms of like healthcare or financial or law firms, like those are fine. I'm talking more about like highly regulated, like obviously government and state types of companies. So you want to stay away from those. You can make those work. In the past, we've never really seen any success with them. So we always will never take on a client that's targeting the federal government. Now, typically with a company size of $5,000 to $10,000 plus, with a good offer, you can expect your cost per qualified book demo to be anything around $300 to $400. Okay, so that's the second component, right? Is making sure you have a big TAM to go after, because that's going to make your life way easier when running ads. Okay, so the next thing that I want to talk about is sales process and sales cycle. Now, this one's pretty intuitive, right? Obviously, if you have a sales process where you actually take people through from click to close and you can build trust with them during that sales process, it's going to make way more sense for you to run ads because you can close more deals. So your overall customer acquisition cost is going to be lower. For example, if you're closing at 10% versus 20%, right? Just a double in your close rate, you're going to have to pay 2 times more for CAC, right? Which is your customer acquisition cost, versus if you close at 20% or even 30%, you're going to be paying way less for your customer acquisition cost, so you can scale way quicker. So it's super important to have your sales process dialed in. And there's a couple components that go into sales process, such as obviously script, your offer, what is it you're doing, the assets that you send them before the call, and how you're building trust with them during the actual calls itself. So sales process needs to be dialed in, because that's going to help you obviously bring down your overall cost, which is going to make it way easier for you to scale. Now, the next thing I don't see a lot of people talk about is sales cycle. Now, this kind of coincides with TAM as well, because if you're going after, a certain market, they may have longer or shorter sales cycles, but typically you want to find markets where the sales cycles are super quick, because you want to be able to obviously pay for the meeting that you get and then make your money back as soon as possible. And essentially what this is called is your sales velocity. You want to make sure that, for example, as soon as someone books a call, within a week, they're closing, because if they can close quicker, you can get your money back quicker, which you can then reinvest back into the ad. So you want to pick markets that have lower sales cycles, that it's easier for you to get the deal over the line, and that you can then reinvest that money back into the ads themselves. Now, also, one big note here as well is that sometimes your sales cycle might be impacted by your sales process. So if you have a really bad sales process and you're not good at selling, you are going to inadvertently make your sales cycle longer. So what I'm talking about specifically is that if you're going after, really big companies, enterprise companies, and they have long sales cycles, that typically is just the market that you're going after. But if, for example, if you're going after SMBs and you have a really long sales cycle, you should look more at your sales process, because that's typically what's affecting your sales cycle. All right, so those are the first 3 things that are really important when running paid ads and what I've learned. Now, the last one is the founder. Now, this may surprise some of you, but from what we found and working with over 50 plus B2B SaaS, AI, and tech clients, is that there are certain founder characteristics that we look for when we want to onboard a client, because some clients may have a great product and they have all these other 3 things, but if the founder isn't in the right headspace when actually running ads, then they're typically going to fall flat on their face. Because first of all, you need to be non-emotional as a founder when running ads, because you are going to sometimes spend money upwards of $10,000, $20,000 before you see a deal come through. So you have to be able to stomach the fact that sometimes you have to spend to be able to figure out the right messaging, the right product market fit, to see exactly how to position your offer on the sales side before you actually close a deal. And so a lot of times we work with founders who will spend $1,000 and they'll be throwing up their hands saying, where's my closed deal that happens? Where you have to understand that a big part of running ads is not being emotional when it comes to the day-to-day ad results. You have to look over things over the course of a week to 2 weeks to 3 weeks to really get ample data to be able to make a decision. And so you have to make sure that you're non-emotional in that sense. And you have to also make sure that you are willing to take on risk, because when it comes to running ads, it is a risk. Like anything, when you're growing your business, you are going to be required to spend money before you see that money back. And so you have to be able to say, you know what, I'm okay with taking these calculated risks, because I understand that if I crack ads, I have now cracked one of the best channels for me to be able to grow my business, and I can grow it over years to come, right? So that's really how the most successful founders look at this, is like, hey, I'm taking this risk so that I can crack this channel. And once I do, I know this channel has so much upside and scalability for me. And the next one characteristic is being able to pivot pivot. So a lot of the times when you're running ads, you're going to find that certain ways that you position your product are going to be better than other ways. So you can't be stuck in just your way and what you feel like the market should respond to. You have to adjust to what the market is telling you. So a lot of the best founders that we work with are able to pivot quickly, understand that, okay, I presented this offer to 10 people. Nobody's saying yes. Maybe I need to change the way that I present it to make sure that it's more enticing for people to actually respond to. Now, this is very important because when you're running ads, it's never going to be your first inclination that you're right with. It's going to be your second or your third iteration that you do that you're able to see, okay, now I finally found the right positioning and the right market fit. So those are the three main things that I see in every successful founder who runs paid ads. All right, so let's recap what we just covered. After 200 plus ad campaigns across B2B SaaS companies, there are really only 4 things that determine whether paid ads scale or die. Your offer has to be strong enough to convert cold traffic. Your TAM has to be large enough to actually scale. Your sales process has to be able to close leads your ads bring in. And the fourth factor has everything to do with who you are as a founder. So if you're a B2B SaaS company and you want our team to come in and install our paid ad system and guarantee to get your ads profitable within 90 days or we give you a refund, go ahead and book a call with me in the description. But other than that, I hope you guys have a great rest of your day. Make sure to drop a comment below which of the 4 actually surprises you the most. But other than that, take it easy, guys. Ciao.